Good evening, everybody, and welcome to Millionaire Mindset Mondays. I'm Jan Carmanico Reeves, your host, and I'm here every Monday night at 6 p.m. EST. And we have incredible guests with us tonight. I have my good friend, Johnny Lombardo. Welcome, Johnny. Thank you for being with us on Thanksgiving Monday. Um, yeah, welcome. Great to see you again. And why don't we start with tell the listeners a little bit about yourself, a little bit about your background.
Yeah, absolutely. Appreciate that. And thanks for having me on Thanksgiving as well. We just got back from my mother's house and kind of rushing back home and, getting ready and just getting ready for this. So excuse the huff tone, right? Like I'm a
Yeah,
little out of breath running in the house here, but
yeah, no, thank you for that. I wasn't sure if we were going to do it, but I just thought let's do it anyways, right? On Thanksgiving, we can record it and people may see it later. So
yeah,
thank you.
absolutely. Absolutely. Well, a little bit about myself. I'm a father of two. My wife and I have twin girls. They're turning 10 in a few days here. Well, just in about a month's time. So, big changes in the household all around with grade four starting and all that. So that's kind of on the personal side there. We on more the other side of that, I'm a business consultant. I do business advisory services, project management, risk management. I set up, I set them up with processes and how to work, and I evaluate that kind of thing within them. And I work with multinationals. So I'm working with an Australian mining company at the moment, but I've worked with financial industry as well here in Canada, several different banks here in Montreal head office. So that's kind of a very big, like, as we say in French, survol, like a very high level thing about what I do, because it can get pretty boring as a description sometimes. But yeah, I find it interesting and, you know, it's fun times most of the time. On the real estate side, my wife and I used to own actually some properties together, some triplexes here in Montreal. We've since kind of liquidated. We're consolidating, and we're kind of going to move forward on a personal side in maybe bigger projects. We'll see what happens. But Phil and I, who's my business partner, Philip Parenteau, we have our own real estate company as well. And what we do is we invest in multifamily properties. And we do it in one of the harder markets in Canada, which is the Quebec market. And we've been very successful. So we're very excited to, move into some of the other provinces, which might be a little bit easier than Quebec. We'll see how that works. But we have some multifamilies in Sherbrooke, Quebec. And that's kind of what our segment is. That's what we like.
Very, yeah, very cool. Yeah, I've heard there's different rules in Quebec, eh? About even
Yeah.
rent increases are July 1st, I think, like across the board. Is that how it goes?
So that's one of the things. One of the
Mhm.
things that has happened with one of the Quebec governments, they kind of instituted that moving day will be July 1st. And so everybody kind of realigned themselves because that will simplify, quote unquote, the move and the signing of leases and the calculations and all of these things across the board. So everybody kind of knows that moving day is, July 1st. Now, we have off season leases and things like that, 6 month lease, 1 month lease, and all sorts of things, and all throughout the year. But I'd say a good 80 to 85% of all leases in Quebec is July 1st. You're moving out and you're moving back in, kind of thing into
Wow.
your leases.
Try to get a moving truck on July 1st in Quebec,
It's
right?
You see a lot of those white cube trucks coming up, just like the Johnny Lombardo just wanting to make a quick buck here and there, moving with his buddy, and just kind of renting out your truck and things like that. So, but it works. It kind of works for us. Aside
Yeah.
from that, the rules are, I would say, pretty similar to Ontario.
Okay.
Um, there's some red tape here and there, some forms that are different, but overall, I think the majority of the rules are similar to Ontario as well. I think that's also a misconception about Ontario and Quebec rules, but yeah.
Okay. Okay. So it's not, as we say, a landlord friendly province.
No, I wouldn't, not like Alberta or Saskatchewan. Those are much more, landlord friendly, but I've never had an issue. And, we play in the rules. We know the rules, and we know the tenants mostly know the rules. Most of the tenants know the rules. And as long as you stay, on the straight and narrow, you can win for everybody. So it could be a win-win for you and the tenant.
Absolutely. Yeah. Yeah. No, the advantage in Ontario, and I'm not sure if it's the same in Quebec, is maybe not as landlord friendly, but great appreciation. Is it the same case in Quebec?
I would say it depends on the market. For example, here in Montreal, people will swear by it that the appreciation is steady and it grows and it will never go down. Where we are in Sherbrooke, Quebec, it's just secondary market. I don't think that the appreciation has ever gone down since we've been there. If anything, it's increased dramatically. But yeah, it's the Ontario and Quebec markets are similar. It's the steady growth. It's funny you mentioned that though, because I was just reading an article about steady markets and cash flowing markets and landlord friendly versus not. And what we're seeing is a general decline of the rent amounts across Canada.
Hmm.
And the only couple spots that have not gone down are in fact Quebec, specifically Montreal, and like one other I think it was Manitoba, some spots in Manitoba that the rents have actually increased, whereas Alberta has gone down like what was it like 7%, and Ontario has gone down a little bit, and BC has plummeted, and but I'm not plummeted. I'm not a doomser here, but we'll say anywhere between 5 and 10% over the last year.
Hmm.
But yeah, Quebec market is very steady. Again, Montreal, Quebec City, Sherbrooke, the three largest, I would say, markets here. Pretty steady upwards.
Nice, nice. And so there's an influx of people coming in then. Because I think the decrease is because of supply and demand, right? And the decrease in immigration is affecting that. But
So I think that's one of it, right? One of the
mm,
things here in Quebec, I think I read also that we're kind of cutting back on how many new entrants we're taking in over the next few years. So that might affect things. But what we're seeing is in places like Alberta, Calgary, Edmonton, Red Deer, there's so much new construction that it's actually increased the supply,
right, right.
right? And
Yes.
so because Quebec has a very, I'll say, tight tenancy laws and rent increase rules. It's also very stable. And whereas the rent doesn't necessarily go down. In fact, we had one of our largest percentage increase. I think it could go up almost to 7% depending on the calculations here in Quebec of rent increases, whereas normally it's between like 2 and 4% annually.
Hmm.
Whereas, you go to places like Saskatchewan and Alberta, and you can increase rents basically to whatever the market is. It could be a 5%, it could be a whatever stupid number, like whatever that comes out to. I'll say 25% just for exaggerations, right? Because there's no rent regulations, really. And now because there's so much supply and immigration is coming down a little bit, it's still a lot, but still coming down. Um, no rent control means that the rents fluctuate just as much as they go up, right? They go down just as much as they go up.
Right.
Whereas Ontario is also very regulated, I think. And so, still have that steady growth of that rent increase.
Right. Yeah, Ontario is a bit of a hybrid. It has been 2.5% increase. For 26, they've dropped it down to 2%. However, on new builds, there is no rent cap. So you can, according to the market, though, you can only raise rent so much. I mean, according to what the market rents are, right?
Yeah, and I think Quebec also has that. There's like a 5-year moratorium
Hmm.
of no rent control on new builds here in Quebec as well. I think it's 5 years in Ontario as well. Is that right?
It was. I believe anything built after 2017 or 18. I forget the year now offhand,
Uh,
but I
for
just know
us,
that one of my
it's
buildings falls into that category, and then anything new would be in there.
okay. Okay,
Yeah.
well, that's interesting. I'd have to look into it more, but I know here from the day that it's finished construction, you have 5 years to basically put the
Okay.
rent to whatever you want,
Okay.
essentially,
Yeah.
whatever the market supports.
Okay. Okay. Yeah, and that's the key words there is whatever the market supports, right? You can't, yeah,
Exactly.
yeah,
Exactly.
exactly. Exactly. Oh, so that's interesting. So, yeah, you are thinking of expanding into Ontario?
Not so much.
No.
Um,
Okay.
if we really think about it, we're really set up in Sherbrooke, and so we could buy another in Sherbrooke, Sherbrooke, Quebec. But we do want to take advantage of the other markets. We want to be able to diversify, and because our partners are very satisfied with how we ran our last few projects with them, we want to make sure that we're giving them a little bit extra in terms of effort, in terms of diversification. I think that's really, really important. And it's great to have the stability of the Quebec market. And again, I'm going to put like this disclaimer out there, and some people told me not to do this, but I'm not fully successful. I'm not, living off of the real estate. I still work full time. I'm not one of those guys coming in here and saying, I've got 150 doors or whatever it is, and this is how it has to be done. But from a consultant perspective, I'm kind of like, you know what? It's great to have that stability, but let's see what else we can have elsewhere where we can have maybe a little bit better growth or better control, or maybe I can mitigate some of the risks that I can't as easily do here, but I can mitigate them a little easier somewhere else. So we'll see what happens. We're taking our time. I'm gauging the market. I'm not the kind of person to just follow a trend. That's kind
Right?
of, I'm not a trend follower. I do potentially overanalyze things a little bit. I was told that's a superpower. So I'll
Absolutely.
take my superpower and I'll leverage it as much as I can.
Absolutely. Absolutely. And yeah, so I think some of the questions you answered, slow growth. Slow growth is a good thing, right? Not over leveraging, not getting 150 doors in the first 2 years and, you know, just take your time, find good deals and stabilize them, refinance them.
Yeah, and it's funny that you kind of bring that up because as I was answering some of the pre-session questionnaires, and I'm thinking to myself, wow, I'm in such a different place from a mindset perspective in relation specifically to growth and real estate and investments. Um, over the last few years, right before I really jumped into the multifamily space, um, I had joined a couple different groups. Um, I don't know if I'm even allowed to kind of mention them
Yeah,
publicly
yeah,
or
yeah,
whatever.
yeah, yeah.
So I had joined things like Keyspire and Wealth Genius, and and they're great for what the learning aspect and the community and the networking. But coming into that multifamily space, I really had, I'll say, um, I had set the bar really high. Okay. And I said, I'm going to have that exponential growth. And I'm talking to people and I'm saying things like, hey, come on board. I'm doing this thing and I've got the learnings and the experience with, these small properties, which is great to start out with. But I'm shooting for exponential growth, 2 to 3 properties a year. And we're talking about multifamily, lack of experience when you're talking to people, right? And I'm thinking to myself, exponential growth, 2 properties a year, 3 properties a year. Let's go, let's go, let's go. And today, when I'm looking back at the amount of work that nobody tells you goes into owning multifamily, like nobody tells you the amount of work that it actually takes as an active partner, because we're active partners, we're the ones managing, we have assets under management. Um, and it's really surprised. I mean, we kind of knew, Phil and I kind of knew already, right? It's going to take a lot of work. It's going to do this. We need to get things in order. But when you get in it, Jan, nobody tells you you're going to be up at night and you're going to be traveling and you're going to be, on the phone all the time, even if you have a property manager on site,
Hmm.
you know. Um, and so it kind of, I won't say. reduced, I'll say tempered, like steel, you temper steel to become stronger. Well, it kind of tempered my expectations.
Okay.
I don't know
Okay.
if I can use that analogy, if I even used it correctly, but it's the first thing that came
Yeah.
into my
Yeah,
mind
no,
here,
I like that a lot.
and so, no, we haven't bought a property in a year or two. So from that big, hairy, scary goal of 2 to 3 properties a year, I'm kind of okay, sort of, with not having bought anything for the last year or two, right?
Right?
Um, because now we're stable. Our property is stable. Our properties, I should say, are stable. They're refinanced. Our partners have all received their capital back, and they want us to reinvest I'll call them winnings, the gains that we have. And so they're trusting me to find the next thing, which is humbling. Um,
But that in itself is a huge job, right? Finding the next one.
yeah, absolutely. And since the COVID era, prices have all gone way up. So you have to raise more money, or you can do one of these, I'll call them schemes of 5% down type of things.
Hmm.
And I've never felt comfortable. We could talk about that, I suppose, but I've never felt comfortable with that amount of leverage, 95%, loan to value. That's scary to me.
Hmm.
Um, but to find the properties that, again, I do like air quotes a lot. I'm Sicilian. I use my hands, find properties that work. It's really challenging. And I'm not the only one that kind of says this. A lot of people that I talk to are telling me, my students tell me, I can't seem to find a property. I'm like, don't worry. Everybody's in the same boat. Everybody's in the same boat. Nobody can find a property that works. And the ones that do, they've been working on it for the last 6, 7, 8, 9 months. And now they're ready to close, but it took that long. And
Yeah.
they've analyzed a quadrillion, properties behind those, right? So yeah, it is what it is, but we're plugging away. We're working on it.
Yeah. And that's what I think people don't realize, the active partner, just how much work is involved in being the active
Yeah.
partner,
Mhm.
right? Starting with finding a property that will work.
Yeah, that's absolutely the case. I don't want to, I don't want to like speak towards this, I'm trying to spin this in a certain way, Jen, for your audience here, but the idea that's sometimes put out there is that really just find the property manager and you're good to go. But like there's a ton of other things like from the prospecting. I've underwritten hundreds and hundreds of deals over the last few years, even before finding the properties that we have today. And then once you underwrite them, you have to put that offer in and then or offers, because there's multiple over, let's say, a month, 2 months, 5 months, a year amount of time, and you're negotiating each of those, and you're trying to work those down, and that takes time, and then you close, and then there's costs, and then there's this, and then there's taxes, and then there's renovations, and then there's, you know, what is it? The three T's: tenants, toilets, and what's the
What's-
tenants, termites, and no, tenants, toilets, and come on, Jen, help me out.
Oh, I would say just tenants and toilets.
Oh,
Is
there's a
it
third one
right?
in there. Anyway, somebody
Okay.
online
Okay.
knows what it is.
Yeah.
It's fine. Um, but yeah, there's all sorts of things, contractor delays and property manager switching. We've switched property managers. We had to, it is what it is. You got to do what's best for your partners. And if it's not working out anymore, you try and do it as amicable as you can. But, nobody likes being dropped, kind of thing. But
Right, right.
yeah.
Yeah. Yeah.
Yeah,
But
it's a
and it
lot of work. Oh, refinancing takes a lot of work, Jen.
I'm
Refi
refinancing right now. Yes.
takes a lot of work.
It's a
How
lot of
much
work.
paperwork goes behind, how much research, how much, talking with your broker, talking with your bank, talking with your accountant and getting your paper. It's a lot of work,
Yeah. Yeah.
and a
Even
lot of passive partners don't realize.
yes.
They don't
Hours
realize.
and hours and hours. Even underwriting the property, like you have to get insurance quotes, you have to get maybe contractor quotes, you have to verify, the utilities, the taxes, you have to verify all the numbers that they give you. Yeah, and look at their books and look at the area, look at the tenant profile. Like there's so many things that you have to do. It's uh several hours just to underwrite one property. And it may or may not work. And like it likely won't work, right? So then it's on to the next. And it's just hours of work to do.
Yeah, absolutely. Absolutely. And but that's why we do it, right, Jan? Because not a lot of people really want to get into that amount of work. They just don't. And
Or know how to.
or know how, or they don't
Yeah,
know how.
yeah.
Sure.
That's the benefit that we have from joining these investor groups, right? Is the education
Yeah.
behind it and our network of people that maybe there's somebody that's done a similar project that you can reach out to and, get their advice, troubleshoot with them what the property may be looking like down the road or so yeah, there's a lot of value in the active partner that I think people maybe don't realize the work that goes into it.
Yeah, I get comments sometimes, it's like, yeah, but Johnny, you're just gonna have a property manager on site. They're gonna do all the work. Ah, you know, yeah, not quite how it works, but we'll run with that and
Yeah.
we'll talk, but let's dig into that. Let's unpack it, as my pastor says. Let's unpack that a little
Yeah,
bit,
yeah,
and
yeah, yeah.
and see what that looks like. Yeah.
Well, first of all, you do have to manage the property managers, right?
That's the first thing, yeah.
That's the first thing. But yeah, if there's yeah, work to be done, contractors, there's yeah, the bookkeeping, the accountants, the
Monthly
compliance.
reconciliations, invoicing, not only sending out invoices, but paying off invoices and understanding what that looks like. You got your taxes, you gotta negotiate sometimes with the city about the taxes. Can I renegotiate that? Is that something like people who are or in new builds or in conversion builds? There's a lot of paperwork behind that, even though you're managing the property as it is today, but you're working behind the scenes to get permitting, get zoning changes, all of these things, finding the right builder, finding the right contract. Like it's a ton of work. It's a ton of work. But you know what? Again, some people don't know how to do it, but want to get into real estate. Others don't want to do it, right? They know what it takes. Maybe they've done it in the past, and now they're like, you know what?
I'm
I've
good.
I've I've done it. I'm
Yeah,
good.
yeah,
Here, you deal with it.
yeah,
And
yeah,
I'll partner with you and just
yeah.
move on
Here's my
like
hundred
that.
grand. Yeah, make me money.
And that's fine too. You know what?
Yeah,
That's fine too.
yeah, absolutely. That's yeah, and that's what makes it all work. Is we have to have the financial partners as well to make the projects work, right? So
Yeah. Yeah,
yeah,
absolutely.
yeah, very good. Yeah, so ton of work being an active partner that I think people maybe don't realize. Um, Now, when you're looking for partners, do you have a checklist of um, questions you ask them, or how do you align with your financial partners?
How do I align with my financial partners? So that is not on script, Jan, first of all.
Just throw that out to you, Johnny. Just from past experience, like different people do different things. Yeah.
So so I'm the kind of the partner relations person, right?
Okay.
I'm the one that puts my face out there. I'm the one that, I haven't done it much lately, but I'm the one that kind of talks about properties. I'm the one that books the Zoom calls, and that's kind of the relationship and the partnership that Phil and I have. And so a lot of it comes down to that initial call, right? How do I feel talking to Jan about this property? What are the
Great.
kind of questions that Jan's asking me? Is she immediately talking about what's my cash flow return? I'm not sure, Jan, if that's really going to work out for the relationship here, right? So I got to kind of gauge that. Is Jan nitpicking the fact that a toilet might cost 150 bucks and not $99 at, a hardware store on the first or second call. I'm not sure if that's going to work right now. Like, are you wanting to manage this, Jan, or do you want me to manage it, right? And I'll be fully transparent with you. I'm going to show you everything, all the invoices, all the whatever it is. And that's going to be throughout the life of the project, right? So, how do I feel talking to you, Jan, when you reaching out to me asking about the project that I'm trying to close? Certainly, there's a net worth question there.
Right.
And that's also part of that whole trust and transparency thing, right? I'm going to open up my books to you. I would love to know if I need to, like, which path I need to go down from a contractual perspective,
Right.
right, with the accountant and legally as well,
Mm-hmm.
right? Are you an eligible? Are you an accredited? Are you neither? Are you
Mm-hmm.
an ultra high net worth? Are you a high net? Like, these are important questions. And if there isn't that reciprocity of discussion and clarity, it's
Transparency.
very hard for me then, Jan, to say, you know what, I trust you, Jan, to come into the project and contribute to the project in the way that you're going to,
Mm-hmm.
and still trust me to deliver back everything that I'm saying I'm going to work towards, right? I'm working towards something. Do you believe me, Jan? Great. I need to believe also what you're telling me. And if you're hesitant there, right? If you're nitpicking, if you're calling me and I'm giving you an example of my property previous projects, and you're breaking it down and cutting it apart and kind of bashing me, which by the way, people have done to me. They bash my projects and they're like, tell me about you. I'm like, I don't know if I want to tell you about my next project. You
Yeah,
know,
yeah, exactly.
so
Exactly.
it's that kind of a discussion. You and I right now, I joined this. You're my first real podcast that I've joined. I was super nervous. I thought it was going to be like question, answer. And but we're having a
And then there
like
I threw you off.
yeah,
Yeah.
yeah, yeah. But we're having a conversation, right? And this is kind
Exactly.
of like what I'm looking for. Can I get on a partner meeting and know Jan is open to converse with me
Right.
and
Right.
and me with her? Can she converse? Can I converse with Jan as well? So these are the kinds of feelings. Yes, um, I'm a very logical person, like a pragmatic person, almost to a fault, almost. But that gut feeling, that intuition, is huge when talking to people.
It is huge. And a good point that you bring up about if they're going to nitpick about the toilets, the cost of the toilets, because I think your financial partner has to trust you because nothing in real estate investing goes according to plans, right?
Never.
So, I mean, they have to be able to trust you and your experience to make the calls to do the right thing for the project without having to report to them every little tiny detail. And I mean, I think that should be transparent in your agreement, right? Like, what's the dollar value that you want to report on, or am I good to go with anything under $5,000? Am I good to go with, or like because that having to report about toilets would slow the project down, right? Like it wouldn't work. And they have to have the trust in you is essentially what it boils down to.
Yeah, and we do have those in our agreements. Anything above X dollar, and it depends project by project. Anything
Right.
below X dollar, excuse me, not above, below X dollar, we don't have to come and negotiate and discuss with all the partners and see what's up. There's some partnerships where there's zero communication, regardless. Like not even a email or quarterly or an anything. And I just don't understand that type of a structure to me. Um, I don't want to get too much into the details, but like we open up our renovation tracker. Like they have access to it. They see the progress. They see the list of things that we're going to do. They see if it's falling behind. We talk about them. We have, different ways of communicating with them, whether it's scheduled or unscheduled. Our partners, I'm talking about the partners, right?
Right. Right.
And the financials, we share. how much things cost when it's, certain dollar values. We do the financials at the end of the year so that they can do their own taxes. Like there's all sorts of things that go into transparency. Um, I think that is an overused term by too many people that are not actually embodying what that actually means. Honesty, integrity, transparency, they're like the three cornerstones, the trifecta of what everybody markets and upsells in their partnerships. And then when you hear things, it's a small world, Jen, small world. And then you realize, oh, were they honest and show integrity and transparent with their partners? I guess not, but right, over the last 5 years, John, how many projects and active partners did you see evaporate?
Yeah.
And people got really hurt because they trusted the marketing and upsell of cash flow, cash flow, cash flow, cap rate, cap rate, cap rate, and all these things rather than following what's gonna keep my X thousands of dollars of contribution safe. Like there's
Yeah.
that, honesty, integrity, transparency, super cliche, I know, but if you know, don't embody them, then they're literally meaningless words.
Agreed. And I love that you mentioned those three several times in your
Oh,
questionnaire. Yeah, as it was a cliche. I was going to bring that up, but you already have. That's great. Yeah, and I mean, we've seen, especially in the last couple of years, a lot of big players go down and take a lot of investor money with them, and yeah, it makes me sad. Like it just, I can't even begin to imagine how they can sleep at night.
maybe some of them can very comfortably, Jan.
Yeah,
We
I
don't know. Maybe
yeah,
others are losing sleep over the fact that the project didn't go as planned. You can't really, unless you have the lawsuits that have closed, and then right? You have the
the
guy out
details.
out
Yeah.
in BC, very big name. I'm not going to name him now. Like there were two or three people in the middle of Canada, Saskatchewan, I think, or Manitoba, totally hooped a bunch of people there. Like there's just a lot of things going on in our industry, in this industry anyway, that I mean, you got to market yourself to some degree.
Yeah.
To some degree, you have to, right?
Right.
Sell or be sold. I'm sure everybody's heard that before, but you got to do it with some onus on yourself
Right.
as well, right?
And I think many of them were P notes, right? Promissory notes that
Mm.
um yeah, and people got caught up with it, and myself. Like invested some of my funds in P notes, and thankfully, I got my capital back. I missed out on some of the interest payments, but many did not. But the returns were great and things were going good. And you know what I mean? So you kind of get caught up in that. And in hindsight, like I would never do it again. And I also wouldn't borrow on a promissory note, right? Like when I bring in investors, I bring in for equity only. I just think it's
Yeah.
fair. It's only fair, you know?
Yeah, you're absolutely right. And there's different ways of doing that one too. But like, excuse me, when I was closing on these two properties, people were asking, "Hey, I don't want to be on the paperwork. I don't want to be on the paperwork. Just put a side JV over there," which you can do. It's a
Yeah,
legitimate thing, but it's over there, right, out of sight. And then others were saying, "Hey, can you do a P note for me?" To come in with P note. I'm like, I don't do P notes. I don't give P notes, and I don't receive P notes. Like that
yeah,
is not my thing, right? I am staying as far away from that as possible. And some people call me nuts because, returns are huge on P notes if I were to lend out on a P
yeah,
note.
yeah.
but it is what it is at the same time. And so I like keeping things above board, equity only, corporation structure. Um, as we grow, maybe another structure will work for us, and it's going to be a slow, steady growth, you know?
Yeah, that's slow. Yeah. Slow is good, right? Like over leveraging, growing too quickly. And the other thing with that is you need to have good, solid systems in place, right?
Yes. Yeah, absolutely. Yeah, so I mean for the systems in place, some people are very tech savvy and they're gonna go and throw something up in a in you know in let's say I'll say I don't know if you know Trello, but it's basically just a way of tracking tasks and things like that. And you can have team members come in and you track them, has it started, is it in progress, whatever. Others use things like HubSpot, CRM to track, let's say, partner conversations. I use, for our renovation tracking, I simply use an Excel file and, those are, but it's a robust one. I mean, I am who I am. But, every property has its own, and every project has its own real, um, what's the word I'm looking for? Like idiosyncrasies, like they're each different. And it's a little, humbling and embarrassing at the same time as a consultant to say, I don't have very set processes in place. Like that's my thing, Jen, right? I know process and I know how to set things up, but I also know how to be nimble enough to swivel and work around the weirdness that comes out every once in a while. So we've kind of set up our processes somewhat hybrid. Partner information goes here, prospect information goes there, property information, and we work through that. Property management conversations, this is how we work. Bank accounts, we have our own processes and ways of set up. And as we grow, we'll set them up a little bit more structured. They'll go into, maybe less systems, consolidate a little bit. But for now, that's where we are, and it works for us.
Yeah, yeah. And yeah, until you get, 450 doors that it needs. But I mean, even still, um, you have your systems, there's always got to be a little bit of flow to them too, right? Because like you said, it's not cookie cutter.
No, and it can't be cookie cutter.
No,
Even builders that are building, the same building in three different cities, you're going to have all sorts of different weirdness coming up in terms of permits and legal and then construction and finding materials and raising even funds depending on where you are is going to look a little bit different for those builds. It's not cookie cutter.
no, it's not at all. That's that's the thing about real estate, right? You just you can't even fathom some of the unknowns that are going to come up, right? Until they come up, right?
Yeah, absolutely.
Yeah, that's why you have to have all these contingency plans, plan A, B, C, D, E, right?
I remember Phil and I we were flipping a duplex, just he and I. No partners, no nothing. It was like testing our partnership as two active partners. We wanted to do a project first. And man, we went through all the way to D in terms of our plans, for sure, for sure. And we backtracked on one of the plans too, and then we jumped over it back to D, and it was just and it worked. It worked.
Yeah, but and that's the thing. I think another thing being a real estate investor is you have to be able to pivot on a dime and you have to be creative with your thinking, right? Like it's just because things come up time
Yeah,
after time after time after time, things that you couldn't possibly imagine. And you
yeah,
just have to be able to go with it. Yeah,
100%, 100%.
and
It's
figure
it's
it out.
not it's not it's not something made for everybody, that's for sure.
It most certainly isn't. It most certainly isn't. Now, I'm have been a business owner all my life, so I'm a little more used to but I can't even imagine somebody who works in a corporate job that is very structured and 9 to 5 and has a steady paycheck, T4 income, all that kind of stuff. I can't even imagine like you hear about people leaving those jobs to go into real estate investing, and I think, Wow, that's a huge leap. Whereas I already have the huge advantage of being used to, this kind of lifestyle all my life and pivoting.
I think that's a huge advantage that you have for sure. Being nimble, being able to pivot, being able to think outside the box as an entrepreneur, you have to be able to think outside the box. Otherwise, you wouldn't be as successful as you are, Jan, right? And
Right.
so I think that's really and not everybody is. Some people
No,
like structure.
no.
Some people like the box.
Yeah, they do. And those are the people that should maybe be the financial partners, right?
Sure.
Or the
Sure.
mortgage brokers or the whatever it is. But yeah, I'm very grateful that I do have that experience that I bring to the table and um yeah, a lot of practice at pivoting and being creative. Right? Um, so, what has been your most successful JV experience?
So because Phil and I also do a little bit of passive, and we did that on purpose, by the way. We're the kind of people that want to experiment with and understand where everybody's coming from, and that's why we went passive on a few deals. Um, our most successful ones are from an active side, the ones that we're part of. I don't have the percentage in front of me, and I probably should. But I mean, everybody got their capital back, and then we have about that same amount or more, like 1.5x of that amount in refi money as well. And that's what we're looking for. And another one is it's 1.25, maybe more than what everybody had put in. So we are able to pay everybody back on the other one. And so our most successful ones are the ones that it sounds like I'm putting myself on a soapbox and I hate this, but like we did well with the projects that we manage. And our partners are happy enough, like I mentioned earlier, that they want us to reinvest that capital and not distribute it back to them. Right. And I think one, that's super humbling. Like we're blessed, Phil and I, with partners that trust us like that. Um, and I don't know. I think that's just a win for everybody, right? And we're still managing those properties. We're going to continue managing those properties, and they're going to still do well over the next 5 years. Um, from a passive side, we we haven't had much luck with the long-term passive stuff yet. They're still in progress, and I don't want to go into them out of respect for those projects and for the participants of those projects. We'll see what happens. I don't know, but from a passive short-term perspective, we did fund a couple flips in the past. Um, yes, Phil and I did do well on the one that we did ourselves, but on a passive side, we did fairly well on one of them and we broke even on another kind of thing. So we kind of touched a little bit of everything. I want to know what that short-term investor feels like. I want to know what that long-term investor feels like. I want to know, right, what this feeling of being on I'll say the other side of the table feels like. And so I guess the most successful ones were the ones that we have today in Sherbrooke, and that's why we're looking for properties now.
Nice. Yeah. Yeah, that's great that you can, yeah, have all the perspectives, right? So, um, be able to answer questions that your partners may not even know that they have, right?
Yeah, yeah,
Brilliant. Yes. Um, so, you've got investor money and now you're looking for more properties and that's a great problem to have, right?
yeah, absolutely. Um, Not sure exactly the location. I'm trying to reach out and have reached out to a few people in different markets, Alberta, Saskatchewan. We're still looking in Sherbrooke as well because that's where our real knowledge base is.
Right.
Um, but yeah, that we're kind of looking for that next one, and it's interesting because even trying to find properties, the listings are not the same. If I look at a listing here in Quebec, it's got the information I need to make my preliminary like analysis, like just like the real napkin kind of calculations. But if I go to Saskatchewan or Alberta, like the listings have nothing in them.
Okay.
And if you don't have a realtor to like that's agreed to work with you, you're not going to get any answers back from the
Oh,
listing realtor at all. It's nuts.
yeah.
It's crazy. You can
I
put whatever
like
you want into that little chat, email, contact a realtor here. I'm worth $3 million. Come back to me on this property. You won't hear anything. They
yeah.
won't reach out to you. It's crazy. It's
Yes,
crazy.
it is crazy. And you can't do anything until you have the numbers, right?
You can't do anything until you have the numbers. Yeah.
Yeah. Yeah. Yeah. Frustrating. Yeah.
Yeah.
Yeah. Yeah. I know I email sometimes, um different emails that come across and the realtors don't even answer, like, can I get the numbers on this? Or, like but yeah, I don't know. I don't understand it. So those are obviously people you don't want to work with, right?
Well,
Yeah,
yeah.
yeah, yeah, that's crazy.
But our I guess our key kind of type of like we're getting hit up with that, you know, the infamous model and template that a lot of people are for the new builds, 8 side-by-side townhomes with a basement suite. And like we're like Phil and I both agree we don't want to touch those,
Yeah,
right? They're flooded the market in the next 2 years. You're gonna have so many of these on the market that you're not going to be able to be competitive. So I like to focus on what I call the boring rectangular boxes,
hmm,
right? Just apartment complexes,
yeah,
main hallway coming in, stairs going up, hallways down, either wing. They're just reliable.
yeah,
They're
yeah.
safe, they're reliable, they have, returns that you can project much easier. They're not hypothetical. You don't need, a 95% loan to value to buy them. When rents go down, that 5% down payment, you're gonna wish you put 15.
I know. I've looked at several of those too, and I just think those rents that they're projecting look awfully high to me, and 5% down, and I don't know, it just looks like it's too good to be true. And I know people that have done them, but yeah, when something shifts, where's your backup plan, right?
Yeah, exactly. And not to knock that, I'll say plan,
Strategy,
that
yeah,
strategy,
yeah.
because I'm sure some people are gonna do well with it.
Hmm.
But I have a lot of fear on behalf of a lot of people over the next 12 to 24 months with that 95% loan to value. You can lock in a really good rate, but if that rate at 95% loan to $1 million property, you have $950,000 mortgage
Hmm.
at 5% interest, even if it's at 40, 45 years amort because it's a new construction.
Right.
That's you missing a couple rents. That's gonna hurt for a couple months.
That's right. That's right. If you got vacant units for 6 months, you know? Yeah,
And
yeah,
even new construction, right, Jen? Like, who knows how that roof was put on? Who knows how the plumbing really is? Is the sump pump working properly or not?
yeah,
I don't know,
yeah,
right?
yeah. Anyways, some people are doing that strategy and kudos to them, and I hope all goes well.
Absolutely.
Like you, I've looked at several of them and I'm not comfortable with the numbers that they're projecting.
Yeah. Yeah.
Yeah.
It's not for everybody. It's for some.
Yeah.
It's for some,
Yeah. 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 Well, any last things you want to share? Like this hour's flown by quickly. I knew
It
it was.
really has.
Yeah. Any little tidbits you want to share with the listeners? Any advice?
I I mean, I don't feel like I'm at a place in real estate that I can give advice out because I'm not that 150 door person, right? So
Johnny,
I
I'm
know, I know,
gonna
I know.
stop you
Imposter
right there.
syndrome. I get it. I get it.
I know,
But
I know you feel like you're not the expert, but you, there's people who are listening who have no idea, right, about real estate investing. And no, we don't have 150 doors but we do know a lot more than they know. So any little bits of things that you've learned along the way that might help somebody who's brand new to
Yeah,
real
I
estate
would,
investing.
I would say, please just don't chase the shiny object. That 15% return on your RRSPs can evaporate and you can lose your RRSPs. Now, do it if like you're 100% sure you've underwritten it yourself, you talked to people, you've went to your accountant, you did all the right things, but chasing that like unicorn deal, and again, Jan, you know me, I'm very analytical, I'm pragmatic. I invested in what I thought you couldn't like mess up, and it's not quite going the way I thought it would, and I'm like, how do you, but we can discuss that another day privately.
Yeah.
But don't chase that shiny object. Trust your gut feeling. If you feel like you're being upsold, you are, right? If
Yeah.
you feel like this person is just marketing to you, you are,
Yeah.
right? And
Yeah.
it's just that gut feeling, and you really got to listen to that voice. Listen to that feeling deep down. No matter what the numbers they're presenting or the numbers that you run, if your gut feeling doesn't feel good, like back away. That would be my only real kind of
Advice.
thoughts on that, advice on
Yeah.
that for sure.
Yeah. Yeah. Agreed. I personally, I don't like to sell a project. I like to find investors and see what will work for them. What how are things going to benefit them? Because everybody's in a different place, right? Like um how old are they? When do they want their money back? When do they, when do they need the refis? When do all those kind of things? How much money do they have to invest? And really tailor it that way. And how can I help you? Let's see if we can, you know, find something that'll work.
Yeah, yeah, that's a great way of doing it, and a lot of the times my projects just aren't good for people. And I'll tell them,
Hmm.
I would love for you to participate and contribute to this, but I don't think this is the project for you.
Exactly.
I've almost lost projects because of that.
Yeah. Yeah.
Right? I just don't think that's a right fit right now. I think that's a great thing.
Yeah.
Understanding the person you're talking to and understanding their needs, Jen, I think you're right on that one. It's like that's got to be first and foremost in, the minds of people in our position.
And I think when you're trying to sell numbers, maybe people that are not as educated in running numbers and things are expecting exactly those numbers. And those
Mhm.
numbers can change, right?
Yeah,
So easily those numbers can change. And essentially they have to trust you that you know enough how to mitigate
that
things that
change.
go wrong, right?
Yeah. Like insurance costs. You might evaluate it at 7% of your income, turn around because you're a new buyer and in that region there was a hailstorm 6 months ago. You
Yeah,
didn't know about it. Now it's 15% of your income because the insurance companies got skittish. You don't
yeah.
know, right?
Yeah, yeah. And I mean, that could change even in the next year of the project. You closed on the project, and then the next year, I had an insurance go up like huge on year three. I had to find a different company, but I don't even know why it was, but it was like an incredible increase.
It's just the way it is, right?
Mm.
Things like cost overruns and just surprise increases in the cost of utilities or whatever.
Right.
Just the way it is. And sometimes that hits into the cash flow, and you just got to be honest and you got to tell people this is what happened, right?
Yeah, yeah, yeah. But I think I like to make people really understand these things can happen. I can't promise you this is what it's going to be. This is what we're projecting, but we can't, if somebody's promising you a return, don't invest with them because you can't promise,
It's
right?
it's a snapshot at best.
Yeah,
It's a
yeah.
snapshot with the information that we have now, here,
Mhm.
today. I love that cup. Relax, I'm an expert. With what I have today in terms of the information, it's a snapshot. I'm projecting. This is the projection.
Yes, yes. That's great. So here we are, 1 hour, just like that.
That was quick.
Right? And you thought you were nervous about what we were going to talk about. I knew I knew we could kill an hour, no problem. Thanks, Johnny. Great to see you. Am I going to see you at the end of the month?
No, some family commitments happened, and unfortunately, I won't be able to make it.
Okay. Okay. Well, great catching up with you here tonight. And thank you again for being a valuable guest to our listeners. And yeah, it's been great.
Let's catch up again, Jen. I'd be happy to come back on.
Absolutely. I'd love to have you back on. So,
Happy Thanksgiving.
yes. And to all our guests, thank you for joining us tonight. And we'll see you all on the next video.